The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And actually, we're really looking for your input this week, because this week I'm going to talk about the cost of money and the best way for you to spend money and things you should do to reduce your debt, because with the inflation and the cost of gas and the cost of food, I thought it would be important for us to talk about things that are affecting you in your life and what you're doing to get through it. Now we're going to talk about the best way to get free money to pay up debt, and I think you're going to find it to be interesting. But we need your help, because if you're somebody that's really good at your budget and you found something to help you while we're all going through this inflationary period and we don't know when it's going to be over, we'd love to hear what you have to say. And obviously, anytime we talk about this, we talk about taxes. So 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. And I got, of course, my buddies in studio, Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey, happy Saturday. I know we went to BJ's today to get gas, and we waited and waited and waited because we save how much with our BJ's card when we get gas?
Brought it down to $4.47 a gallon.
So
that's great. I mean, that's part of those are things that I think we need to talk about. I don't think people understand that not all debt is treated equally. And so I thought it was important that we talk about how not to shoot yourself in the foot. I know when you look at your 401k and you think, oh my God, it's going the wrong direction. And people think what we should do is just cash it in. Would that be a good idea?
No. I had somebody come in a little while ago, and he was sad that it was going down and down and down and down and down. So he was thinking of cashing it in and paying off his mortgage, but it would cost him about 35% in taxes.
Right,
so,
and that's the thing. So if let's say you had $100,000 in your pension, and you said, "This is that I don't want to lose any more money," so you withdraw it. If you're under the age of 59 and a half, and let's say that you were in the 20% bracket, with the state of New York, it's going to be above 35%. It'll cost you like $35,000 to take it out. So you've really added insult to injury.
Yep.
Yeah, crazy. You got to pay attention.
And the other thing
and
is,
ask
if
questions.
you were inclined to say, okay, this is it, I'm going to close my pension, you lose the employer match.
Yeah, absolutely, which
Right?
is free
because
money.
If you're out, they're not matching.
Yep, I know you taught me from a young age. That's like free money,
It is free money.
And so whenever...
at some point in time you pay taxes, but it's free money right now.
Right. I mean, their match, what they're giving
you.
you.
If you, and the other thing is, when you contribute money to your pension, it's tax deductible. So you're losing the deduction and you're losing the match. And so that's a lot of money. So on a $10,000 contribution to your pension plan, it's going to cost you $2,000 to $3,000 in extra taxes and tax benefits. So not only if you take the money out are you going to pay like $35,000 on $100,000 in taxes, you also would lose all the future tax benefits, which would be another $3,000. So you want to make sure that what you do in your pension plan is reallocate your investments to safer ones.
Right.
If it's driving you crazy.
Yep, that's what I said to this client.
Yeah, I mean...
You want to talk to John, Mike, Dave, or Dave?
Yeah, we'll talk to John, Mike, Dave, or Dave. Let's do John first. Hey, John.
Hello.
Hey, John.
Yes, hello.
Can we help you, sir?
Yeah, I hope so. I just wanted
Okay.
to verify that I'm on the right track here, because I got a notice, one of those CP 2000s for the 2020 return.
Okay.
Some proposed changes from the IRS. It related to a couple of 1099s that just slipped through the cracks and did not get on the original return.
Now, were they 1099s from investments or self-employment?
Investments, like this,
Okay.
in a stock sale. And
Okay, so they were stock sales?
a stock sale, yeah.
Okay, so now what the IRS doesn't know is your cost basis in that stock. So when they send you that letter, they only know the gross amount that you sold the stock for, but they don't know what you paid for the stock. So you're going to want to object to that letter and say it's not correct, and you're going to do a corrected 1040X with the cost of that stock, which will then offset what would be taxable, and you might not owe anything at all.
Well, I talked to the IRS. The person on the phone said to do a 1040X and put the added income and put in the correct cost basis. And
Right, that's exactly right.
so
And you're going to do it on the federal and the state.
I generated that on TurboTax. I got a 1040X and then a new 1040 with the proposed changes in it. And so that's basically the procedure.
That's correct. Now, make sure you send it in. You can actually do it electronically. You can do your amended return electronically as well.
Did you inherit the stock, John, or was it your stock?
Oh, it was mine.
Okay.
Yeah,
So-
it's totally.
And you have the correct cost basis. You didn't reinvest the dividends.
Yes, I do. Right.
So did you
Well,
take that into consideration?
Yeah. And I
Okay,
got
good. Well, then that's the correct way to handle it.
I've also got an accuracy-related penalty.
That'll go by the boards.
It will?
It will.
Yeah, they charge penalties based on what they think your balance due is. You're totally adjusting their balance due to a lower amount, so the accuracy penalty will go away.
Okay. All right.
Okay?
Okay, great. Okay, thank you very much.
If you have
All right, thank you,
questions
John.
through the week, don't forget to give us a call. We don't care. Free of charge, 632-7886.
Okay, and let's go to Mike. Hey, Mike.
How you doing, Esther?
Good. What's happening?
I got a house that I bought from my grandparents' estate, and of course, with the upgrades on everything, because people are paying outrageous amounts of money for houses that aren't worth it, they increased the value, and I kind of caught one of your programs late where you were talking about whether something was inherited, something passed on, X basis, so it's going to be worth more. Can I give it to my son? There's only one of them left in it now. The other one got married and, has his own
Now, are you living there right now, Mike?
No, I've got my own house.
Is it a rental property?
No.
So is it just sitting vacant?
It's no, my son's living there, but
Oh, okay, so your son lives in that house.
right, and I was wondering, is it better off to give it to him now?
Well, here's the thing. If you gift him the house, then your basis becomes his basis. But here's the thing, because he's lived in that house has he lived there for at least 2 years?
Oh yeah,
Then is he married or single?
single. He's smart.
Then the first $250,000 of gain is going to be tax-free if he sells it. So you may not have a problem at all, and you could gift it to him right now
Okay,
because he's living in the house. But
I will-
if he moves out of the house and he's been gone for more than 5 years, then it would go back to your original basis. So you really got to find out, does he want to live in that house for at least 5 years before he sells it?
definitely, there's no question. But I mean, I won't have any tax penalty if I give it to
No,
him.
you won't. You won't.
Oh, that's all. Okay, I missed most of that program.
Good question.
Thanks, Mike.
Thanks, Mike. Enjoy the nice weather.
Hey, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we got Dave and Dace?
Dave.
Right?
Dave and Dave.
Oh, my
Dave
fault.
and Dave. And we're going to take a short break. We'll be right back. Dave and Dave, hang on. We'll be right with you.
We are family. I got all my sisters with
Hey, to us, you are family, and this is the head mama, and I'm Esther Gullius, the tax lady, with Tiffany Fabian, Christopher Fabian. And if you listen there, we're advertising early about our tax schools, so it's great. Another way to make money to help pay for the gasoline in your car, and we'd keep you off the streets during tax season, I will tell you that. So should you be interested, you can go to our website. We have a lot of classes, and it's absolutely a free instruction, and it's remarkable because it'll help you in your own finances as well. So kind of today we're talking about inflationary things, tax problems, what to do, what not to do. But remember, if you're somebody that's looking at cashing out of your pension plan because it's doing bad, look at moving the money into something safer inside of your family of funds with your employer. Don't take it out. And then you want to talk to a tax expert. You're a financial expert. You want to make sure that you don't take the advice of your friends over the back fence, because that only worked for Tim the Tool Man, right?
Sometimes.
Sometimes. All right. Let's go back to the phones. We'll talk to Dave. Hey, Dave.
Yeah, how you doing, Esther? Thanks for taking the call.
Yeah, what can we do for you?
I got a question regarding New York State taxation of retirement income. Mm-hmm. My wife has a pension. I understand that $20,000 is not taxed by New York State.
How old is she?
69.
Okay, the
And
first
where does she
20,000
New York
is
State? Did you say
tax-free.
New
Is
York
it a federal,
He said New
state,
York
local
State.
pension, or private pension?
It's a private pension.
Oh,
Then the first 20,000 is tax-free. Yes,
Yeah, and what about? I have a IRA. Is that the
same thing.
portion? To what extent?
The first $20,000 of all private pensions collectively per taxpayer, husband and wife filing a joint return, each one is entitled to deduct the first $20,000 in IRAs and private pensions that they receive and annuities, both you and your spouse. So if your pension is 30, you get to deduct the first 20, and if her pension's 25, she gets to deduct the first 20.
New York State is pretty kind to retirees.
Yep.
Yeah, mine is an IRA, and I got to tell you, I might have to switch to EG tax because big tax accountant never advised me of that.
Really? Well, they haven't been taxing you on it, have they?
New York State has. It hasn't been deducted from New York State.
Well, then we need to amend your returns. So I
Yeah.
don't know what you're doing Monday, but you had a call. We got your money coming back.
Thank you very much. I appreciate your help.
All right. Thank you, sir. Okay, and we got another Dave. We got a run on Dave's today. Hey, Dave.
Hey, how you doing, Esther?
Good.
Not my first time either. I'm in the process of selling some property. I was supposed to actually close yesterday, but I got COVID. So the issue is,
Oh.
I'm just trying to find out what my tax ramifications are going to be, because I was in partners with a person. It's a seasonal property. I bought it with a partner many 30 years ago, and then we split it up. I bought him out, and then I put money into it, a lot of capital improvements and stuff like that. And I'm selling the place lock, stock, and barrel. Lawn equipment, tractors, equipment, you name it, all the bedding, everything. The place is going lock, stock, and barrel.
So was it a business?
No, it was just private. It's a seasonal.
So it wasn't rented. It was just a personal residence.
Personal residence, seasonal.
Okay. It was not somebody's year-round residence.
No,
Was it your primary residence?
no, my primary residence is here in Erie County. This is in.
Okay, so you're going to have to go back. It never was depreciated, right?
No, it's been growing. That's the whole thing in a nutshell.
Okay, so you're going to go back to your original cost basis that you guys paid for the place, and your 50%, then the amount that you paid him to buy him out, then all the improvements that you did over the years, you come up with an adjusted basis. Then from that, you're going to you're going to add all your expensive sale commissions that you paid, or the realtor, the legal fees, your title, and all that stuff to purchase and sell, and you're going to come up with a cost basis. You're going to subtract that from what you sold it for, and the gain is what's going to be taxable. The maximum you can pay is 20% on the federal.
Okay, because I'm retired. I'm 69 years old, and I do have a pension and Social Security, which is under $50,000. So
How much is your Social Security?
it's about 1,800. Take home about 1,800 a month.
Okay, and your pension?
About the same.
Okay, so what's going to happen is this is going to make your Social Security 85% taxable. I don't know how much the gain is, but I'm assuming that it'll be substantial. And so it's going to affect your Social Security, and it may affect his Medicaid, right?
His Medicare, yeah. You may want to actually hold the mortgage for like 5 years or 10 years. That way it defers the gain each year, keeps your Medicare costs down.
Cash deal. It's a cash deal.
Oh, okay.
Okay, and cash is king. So,
Yep.
but if you want us to figure out exactly what it's going to be, that's what we need to know. What you paid for it originally, your half, how much you paid when you bought them out, how much you put into your 50% improvements, the improvements you did 100% after you had it all yourself, the expense of sale, and what you're selling it for, and we'll give you a good idea of what your tax liability is going to be. But the sad thing is, what wasn't taxable before was probably your Social Security, and unfortunately, with the gain on the sale, it's going to affect probably your Medicare that you're going to have to pay next year on your Social Security, and your Social Security is going to be taxable. So if you need help with that, but now usually we can say it was a one-time situation, and they may waive the increase in the Medicare portion, right, Chris?
Right. You do an IRMA appeal.
IRMA appeal.
Yes.
And there's a time frame, so make sure you
Right.
do it
So,
right away.
Okay, Dave. So call us. There's no charge. Happy to help.
The funny part is, too, because the people right down the road from me, their last names are Fabian.
It's a good name.
It is a good name. Okay, and we got a text too, right, Deb?
Yep, we do. It says Esther and Chris and Tiffany are brilliant. Wow, that's so nice.
What a nice thing.
How do you keep track of all those forms and changes and things?
Thanks, Mom, for
the head
texting.
mama helps us a lot.
Well, I'm going to tell you something. If you're doing it all the time, it's just like it's second nature, right?
Yeah. Well, you love law, Esther, and
Well, I
so
love
that
tax
helps.
law.
Yeah.
Well, I love law in general. I don't want to be put in jail.
Well,
Although I don't know if anybody goes to jail.
Well,
anymore.
you say a really good thing is sometimes you say, well, keep reading. There's more to it, and you dissect it, and you tear it apart, and you
That's
make
true.
people think.
As a matter of fact, I'm supposed to go with a friend to Africa, and I haven't had all my vaccines, and so the first thing they say is you can't go to Africa without the vaccine. And she goes, "Oh, Esther, I really want you to go." And then I said, "Keep reading," and then it says, "However, if you haven't gotten your vaccine, if you have a COVID test that's clean within 72 hours of arrival, you can get in." So she said, "How did you know that?" And I said, "That's how tax law is. It first says what you can't do or what it is, and then later on it says, oh, but wait, if this happens, then that's not going to happen. If that happens, then that won't happen." And that's how tax law is.
And then, not to mention, you've had COVID twice.
I have, and that poor gentleman had COVID.
Oh, yeah. I just some people I know have it right
So
now.
let's talk, and before we get to Rich, and again, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. The important thing with inflation, and it's, I just went shopping today myself, and I was looking at some of the prices, like for meat. And now is a good time to be a vegan, except that the vegetables are just as expensive.
Yeah.
I think I bought blueberries that were like $8.
That's
I
why
mean, for
Chris
blueberries.
started a garden in our backyard, right, Chris?
You started a victory garden, right? So what to do if there's inflation? First of all, don't shoot yourself in the foot by cashing in your tax-sheltered investments. We talked about that. Keep putting money into your pension plan, but if it means that you're going to take it out, just go to your HR department and see if they don't have a safer investment, like for instance, like a CD or money market that you can put that money into without taking the money out. If you have debt, and this is the part that I really want to talk about next, is make a plan to get out of debt. And that's where I want to talk about the different types of debt. And you'd be surprised. Some people think that they don't want to do something or they're going to do this, that, or the other thing, and that's the most expensive kind of debt. So if you're in debt, we're going to talk about what to do with that, and hopefully we'll help you with that too. So why don't we talk to Rich before we get into that? Hey, Rich, how can we help you, sir?
This is a compliment, believe it or not. It was about a month ago, and it was called the Tax Guys that I called. Whether that is your same company and everything, I don't know, but I told them the story that I was having. I was supposed to get, my wife and myself were supposed to get a check for $4,000, refund check I'm talking about, $4,600. Well, guess what? They sent us a check, a refund check from the IRS for $5,600.
Wow.
I thought this would be nice and easy to correct. I thought it'd be no problem. But these tax guys gave me a suggestion. Why don't you call your congressman?
Yep, we've done that many a times.
Oh,
Yep.
but the next day I did. Well, guess what? The Congressman Higgins helped me in that office. A woman named Sue, she told me, I'll take care of it. And believe it or not, a month later, we got our refund check.
Yep, they have a special department at all of the congressmen that handle just tax matters, and they're really efficient and wonderful. And we sort of leave it as a last resort, but it's something that we use and recommend.
Well, believe me, I was at a last resort.
Well, that's great. I mean, that's a real success story because people don't know what to do, and that's a lot of money, right?
Yes.
So that's great. So call your congressperson. I suggest you give us a call first because if we can take care of it before getting them involved, because if everybody inundated them, that wouldn't work so hot. But I'm so glad, Rich, that it all worked out for you. And we're going to take a break for the news. I'm Esther Gullius, the tax lady. See you on the other side. Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax, in studio with Tiffany Fabian, Christopher Fabian. We're kind of talking about, inflation and what to do and what not to do. First of all, I want to talk about the different cost of debt, because most people have debt and they don't know what to do with it many times, and especially with credit card interest going up, and with everything else going up, it can be daunting. So I wanted to talk to you about the most expensive kind of debt, and usually that's credit card debt because it can go up to 25, 26%.
28.
So, that's just daunting to have that kind of debt. Taking money out of your pension plan, especially if you're under the age of 59 and a half, another very expensive way of getting income. And personal loans, because they always charge more for personal loans. The least expensive debt would be mortgages, because those are very favored. Right now they're around 6%. Remember when they were 2%? Mm-hmm. I remember when they were 18%. So, because, back in the day, I remember 18% debt. But right now it's 6%. And I will tell you, if you have a 9 or 10% mortgage, refinance while you can.
Yep. Jesse was just on the other day, and he's from Cross State Funding, and he is great at navigating the process, Now,
what was he saying that ARMs were? Did he say? Do you remember?
They were a little bit lower, and I know my daughter, who also works at KeyBank, was saying how they're like securing them under a certain percentage too, where they won't just keep going up like crazy now, like the old ARMs.
Well, so I'm going to tell you, now is not the time to sit back and just say, oh, I don't know what to do. I really don't want to do anything. Nobody likes to do stuff, but I will tell you, if you call us, we will help you to walk through it, because we want everybody to be successful, not only in taxes. We want, obviously, the most important thing is your overall financial help. So mortgages are the least expensive way to have debt. Then the next one would be tied to a home. Again, home equity credit lines. Now, those of you that have seen home prices go up through the roof, and you're carrying credit card debt, you might want to use a home equity credit line to pay off that 25% credit card. It's the same debt, But one you're paying 6% interest, the other paying 25. So we'll talk about that here in a minute. And the other thing is another inexpensive way of getting money would be sale of capital assets, because you get tax preference.
I know my daughter
in capital assets.
My daughter Gracie just went on Facebook Marketplace and sold several things lately. What did she sold?
A four-wheeler.
A four-wheeler, and what else? Or something else?
Yeah, there was. But like our previous caller, they were selling the land that was 30 years old. And, if you have something, a boat, an RV, a camper,
ATV.
An ATV, land that you're not using, sell it.
So the thing is, even though an ATV is a capital asset, if it's a personal capital asset. So if you sell it at a loss, you don't have to report it.
That's right. Yep.
Right? It's tax-free money.
It's like selling something in a garage sale.
Or, sometimes I love driving around and I look in people's backyards and I see these RVs and boats that haven't probably been used in 5 years that are just kind of deteriorating in the backyard. You can turn them into cash.
Yeah.
Tax-free cash.
Yeah. You're not using it. Why keep it?
Right, and this is all to help you to make sure that you have the most money possible to be able to pay your bills in this inflationary time. And so these are just suggestions that might affect you, might be something good. If you have a great suggestion, give us a call. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930.
One thing.
So,
What-
and then,
Chris.
now, here's
Chris was saying
tax-free
something.
money.
He has a
Kevin.
thought. He has a light bulb.
You keep mentioning credit cards. Use your credit card points to your advantage. You don't use credit cards that you don't get points on.
That's a great suggestion. I know that I use up all my American Express because my company and my personal, I use American Express, and all summer long I've been buying stuff with my points.
There you go.
And it's tax-free money.
How many times do
or it's-
people pay for things and they're like, oh, never mind, I'm going to use this credit card because I get points. You know what I mean?
Right, absolutely. But the important thing is don't go into debt, because if you're going into debt, but the other thing is, talking about credit cards, there's zero, if you're somebody that has good credit, there's 0% credit cards out there for a couple of years, a year and a half at least, that you could transfer your debt from a interest charging credit card to the 0% credit card. Again, all of this requires you to do something.
Right. Yeah, like Robbie Raw always says, if you do nothing, you get nothing. Do
Right,
nothing,
don't
take
changes
action.
unless you change.
Nothing changes unless nothing changes. Those are her
Right,
exact
absolutely.
words.
So let's talk about tax-free income. You can borrow money against your pension plan that you want to cash in at work and pay yourself back over a 5-year period, and that's tax-free money. Borrowed money's tax-free.
Yeah, absolutely. Which is so wonderful. I mean, it's
So,
like
if your credit card people, if the rates are going up and you think, I'd really like to get out from under this credit card, so I'll cash in my pension plan. No, borrow against it. Then pay off your credit cards. Then pay yourself back over a 5-year period with interest, and that's a win-win.
Right. Yeah, people don't realize that. You're buying a house and you need money for your down payment. Convert your 401k to an IRA, because your first $10,000 out of an IRA for a down payment is penalty free. Right. I mean, just simple little things is a little trick to save you some
and
money.
so when you take a look at your overall finances, do a little bit here, do a little bit there. And again, we talked about sale of assets like that's in your backyard, cars, second cars. Do you really need that second car? Do you, because of the situation we're in, and you may find yourself, you want to get rid of those credit card debts. These are things that you can do. And many people have credit card debt and they have money in the bank.
Yeah,
So they're getting 2%, 1.5% on their money in the bank, and they're paying 25% on their credit cards. I would suggest that you think about paying off your credit cards with that money in the bank.
I was with somebody the other day and they're like, yeah, my husband used to have a second and a third car, but we would drive it and he would get so nervous if there was a little bit of dirt on it. So she's like, we got to get rid of this. And they did, and they got extra money, and it was a smart move,
Absolutely.
So
And then the other thing is, we've talked about this many times, as long as the Buffalo real estate market is hot, you can make a gigantic killing, and the first $500,000 of gain, the gain is tax-free if you're filing a joint return, $250,000 if you're single. I mean, that is really remarkable. And, I just had somebody the other day that called me, and what they're doing is they're taking advantage of the hot market. They're getting the money tax-free, and they're moving into an apartment until things come down.
Smart.
Mark.
I said that is smart. There's Kevin on the
yeah.
line.
Absolutely. All right, let's go to Kevin. Hey, Kev, how are you, sir?
Hey, how are you folks doing? Good day to you.
Good.
You mentioned the gentleman, Justin, I think was his name.
Jesse from Cross State.
Cross State.
Yes, Cross State funding, and Kristen will Google the number.
Yeah,
but anyways, you had your thoughts were going. What else were you saying?
Oh yeah. So he's like a financial
He's a mortgage broker.
stuff, but mortgage broker.
Yep.
Good. Yeah. We were able to. If you're not, you can always announce that. I don't have to stay on.
Yeah, no, I got his number, 716-984-6968.
And Kevin, he's really smart. I mean, there's been clients that didn't think they could qualify for a mortgage, and he runs like an analysis with his software, and he'll be like, okay, this credit card, you've got a co on there, drop the co, bring down this credit card to a balance of $1,700, bring the other one down to $600, and then I can get you a mortgage. I call it like a recipe. He's got a recipe for helping you to get a mortgage. And
what's so important is he takes the time to work with you. It's just not like you're another number, flip, ma'am, thank you, ma'am. He works with you, and if he can get you a better rate by making a suggestion, and you can do what he's saying, you benefit. And I will tell you, interest rates, I know people didn't think interest rates should go back to 6%, but you sure don't want them to go to 9%,
Right.
So if you got an opportunity to refinance, Cross State Funding does a great job.
Cross State funding, and that's 984-6966. Excuse me.
Yes, that was it.
666. Yeah, great. Thank you so much.
thanks,
Thanks,
Kev.
Kevin.
Always love your accent.
He's from Jamaica, man. Aren't
When
you, Kevin?
he talks, he makes me happy. So
That's true. Palm trees.
Oh,
Right?
the smell of
Okay,
coconut
so let me give
oil.
you this example before we take a break. So let's say you have $25,000 in credit card debt, and you have a home with $200,000 worth of equity, because this is a normal scenario. The credit card interest exceeds over $5,500 a year, because with the raising rates, you're looking at 25%. So your credit card payments, just to keep the balance the way it is, and it's going to take 30 years to amortize, it's going to be $600 a month. So if you move that debt, the $25,000 credit card debt, to a home equity credit line, the payment would be only $193 on that same debt. So, and that would be paid for in 15 years. So the amount that you'd pay in debt if you kept a credit card would be $216,000. The amount you'd pay if you did a home equity over 15 years would be $34,740, a savings of $181,260.
That's remarkable.
That's just pennies.
That's the reality, and that's why, if in this time, while we're all worried about the cost of everything, rather than just complaining, let's do something about it.
And also now credit card companies, and this has been for a while, it shows you if you pay the minimum, it's going to take you this many years, and this is going to be your total payments.
Yep.
But if you pay $100 a month, it's going to take you 3 years, and you're only going to pay this. So it does the math for you to show you how much you can save by paying more than the minimum.
Where is that at?
On every credit card
Oh,
statement.
It does.
Yeah,
it
does.
It lists
It's a New
it.
York State
but
law, I think.
unfortunately, what happens is many people paint themselves into a corner.
Yep.
Because as all of these prices are going up, people still have their certain spending habits.
Yeah.
And unless you change your spending habits, it can be really horrible. All of a sudden, you find yourself behind the 8 ball. And that's what today's show is all about. Things that you can do to get yourself out of that debt. And I will tell you, we will help you. You can call us at EG Tax, and we'll help you to look at some of the things that you can do to get rid of that high interest debt before it becomes a problem. And the other thing is, we didn't really talk about it, but bankruptcy is always something that is in the law to help you if you really can't get out from under. Bankruptcy, I mean, bad credit is as bad as bankruptcy.
Yeah.
But at least a bankruptcy gets rid of the debt.
I was talking to a client not so long ago, and he's like, oh, he was talking about an offer in compromise, and he was so humiliated that recently he filed a bankruptcy. And I'm like, no, don't be humiliated. It's a great option. We don't live in a country where there's a debtor's prison.
Right, you're going to go to the gulag
Right,
because you have debt.
No. You just chop it off.
Nobody wants to go bankrupt, but if you've made some bad decisions or if bad things happened in your life and you owe money and you can't get out from under, there is a remedy, and that's called bankruptcy. And don't think that it makes your credit bad. Bad credit, it makes your credit bad too.
Yeah.
So bad credit is bad credit. I always make it the analogy, when you have debt that you can't pay, it's like bringing a dead body behind you. It stinks. Mm-hmm. And at least what a bankruptcy does is lops off the dead body. You can bury it and move forward.
Yep, and pretty quickly. I've got some people in
That's
our
right.
office who
Hey,
work
we're
for
going
us.
to take a short break. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone, 716-8030930. If you want to text us, we're going to take a short break. Be back on the other side.
We are family. I got all my sisters with me.
Hey, all you family members, we're here today to talk about how you're spending money, because we want to make sure that you're successful, and we don't want to see you during tax time after you took all your money out of your pension plan, and you owe all these other taxes, and it happens, doesn't it, you guys?
Oh, more times than you think.
Yeah, I mean, it's just horrible. So that's part of what we want to do. So we not only prepare taxes, but we help you so that you can be successful in next year's taxes. You know, we're already approaching the 5-month period before the end of the year. So we certainly want to help. I'm Esther Gullius, the tax lady. All right, so we're talking about things you can do to help your finances. And one of the other things is we talked about selling assets, right?
Yep.
RVs, boats, cars, jewelry. Get a second job.
Yep, absolutely.
Right? Or get a job in general. I mean, I don't know how people are making it without a job, but, there are jobs right now, and that suggests if you need money that you do that, or do freelance work. Get the gig economy where you're self-employed. I mean, right now people cutting grass, yard work, snow removal,
Painting.
all those kind of things, self-employment. Yeah.
The people, we need help with painting and landscaping. I mean, I called a painter the other day, and they're 4 months behind. So
Right.
there's work out there, lots of work.
Absolutely. I mean, so that's a way to make money. Then the other thing is just plain old, and this is the part nobody likes, reduce your expenses. I can tell you myself, I was paying the cable company all this money, and I got one of those new TVs, those smart TVs. Well, I learned that I don't need the cable company. I need the cable company for my Wi-Fi, but I don't need it for my TV. And it saved me it was like a 200% savings.
Yeah, I know when you're doing an office and home for somebody and you look at everybody's utilities, the most expensive
the
utility
cable.
is
The
the
TV.
cable.
Is the cable
Is the
bill.
TV, which just
Right, and,
seems
you know,
ridiculous.
And I have to thank my sister-in-law for this. She said, Esther, why are you paying the cable bill for your internet, for your TVs? And she said, why don't you use a smart TV? And so I now am a slinger. You know that commercial on TV about they sling? Well, I'm a slinger too.
And
So,
you have lots of channels?
not a swinger, a slinger.
You have lots of channels when you do that?
Oh my gosh, and I've watched all these really cool movies and they're free.
Yeah, that's cool.
Anyway, why don't we go to Dolores? Hey, Dolores.
Hi, it's Dolores. Thank you. I'm calling all hands on deck.
Yeah, what you need?
This is Citizens Against Wind Turbines in Lake Erie. They are trying to put these wind turbines in the middle of Great Lake Erie and all the lakes. These things, it's the thing I gave you, is Citizens Against Wind Turbines in Lake Erie.com.
So you have a website, right?
Letters of the whole thing is an acronym, I think.
Okay.
Now, there's going to be a meeting on Tuesday, July 12th, 2022 at 5895 Southwestern Boulevard, and it's called the Southtowns Walleye Building. And the program begins at 6:30, although the doors open at 6. This is in Hamburg, New York, but this is all about our Great Lakes. And this is so dangerous because there have been two ladies that have been working on this for years, and they will not stop in trying to get these turbines in our lake. And they're going to dredge stuff up. Then they have the stuff in the middle of the lake. Oh, not a problem. How are they going to get that energy from the turbines to the land?
Well, who's sponsoring them in the first place, Dolores? I mean, a wind turbine is no cheap thing to erect. So who's behind these two ladies?
They're against them.
They're against
Those two
them.
ladies are against
but
them.
who is it that wants to do the turbines? Is it the state of New York? Is it
Find that out.
Niagara Mohawk? Who?
Biden ran for office. There was a man with his name started with a P or a T to the far right when they were debating, and he's a multi-billionaire millionaire. You know, they always have somebody, for example, the ambulance stuff we have where the poor people forget that they can call their local ambulance volunteers in the communities.
Yeah.
These poor I went up against that, and I'm going to tell you, Esther, these poor women were terrified. They'd go into cardiac stuff, and they would send the ambulances where they'd charge you $300 or $400, where if you used your local, they would charge you nothing.
Well, you know, I mean, really, Dolores, what you're saying is that when you know something, knowledge is power. So many people, there's so many things out there that people have no idea are available to them. So we appreciate it. So the meeting is when now?
It is this Tuesday, July 12th. I just got word of it last night. I don't do internet. I hope people get on the internet and give this data out.
Okay, so it's Tuesday night. It starts at the doors open at 5.
Yeah, and it's so funny.
And
I've
it's
heard
at the Walleye Center.
Doors. It's the Southtowns Walleye Building.
Walleye Building.
5895 Southwestern Boulevard.
Okay, good enough. Well, thank you, Dolores, for your call.
Thank you so
All right,
much.
Thank you, dear.
It's so funny. I've heard those wind turbines, and so the byproducts, when they're broken and they break down, there's no way for them to be recycled
down. No.
and broken down. And so there's so much to this conversation, and so much to this conversation.
Okay, and we're not going to go there.
Yeah.
So, okay, and all right, so going back to my list
Cutting
here,
expenses.
so cell phones, that's another expense,
Yep.
right?
Absolutely.
And the cost of cell phones really is going down.
And then I have found out personally, if I find a cell phone that's cheaper, I call my current holder and
they'll match
and then
it.
they'll match it.
Right.
Yeah.
And that's what's really important. Again, doing something,
Yes.
right?
And even with cell phones, you may not need your home phone.
That's
Cancel
right.
your home
That's
phone.
right. Absolutely right. Eating out. Now, I am a big eating out fan, but I mean, let's face it. It's something that maybe if you're eating out 3 times a week, maybe you want to cut it down to 2 times a week. There's all about getting extra income. Buying pre-cut veggies. I mean, it's so convenient. Every mom and dad are both working. It's so much easier, but boy, they charge you an arm and a leg.
They really do. So cut your own veggies.
Cut your own.
I can do that.
And then gas guzzler cars, that kind of goes, I mean, my little clown car that everybody makes fun of, it only fits like 3 people, but it gets really good gas mileage.
It's a really tiny car. It does. It gets
I
great
have a
gas
Fit.
mileage.
I have a Fit. You have my granddaughter has a Fit because I have a Fit, but it's great. It's got good gas mileage. Carpool.
Right.
Right. That's a way to save money. Taking a roommate.
Yep. Absolutely.
move to a less expensive home or apartment. And we talked about selling the house, having it be tax-free, maybe move into an apartment for the time being.
I have a
because
cousin,
this is all about your budget.
and
Yeah?
she sold her house in Florida, and they got an RV, and they work remotely, and
It's
so
true.
they travel all over the country. And I think they have a little.
Of course, I think they're driving less now because of the
Yeah.
cost of gas.
Yeah.
Don't use credit cards. If you do, make sure that 0%, and make sure that you pay them off every month.
Right.
Right?
Yep.
And then here's another one really important. Change your W-4 at work to increase your take-home pay.
Yes.
So if you're feeling the squeeze and you need more money, and you're sitting there laying in bed at night and you say, honey, let's cash in our pension plan at work. No.
Just have a second set of ears.
Change your withholding so you get more take-home pay.
Yeah.
Right. And also, look at New York State. They're still mailing out letters saying, please send us your copies of your W-2s or 1099-Rs, and then we will issue your refund in 90 to 120 days more.
But what are you saying? What are you saying for people?
I'm saying get your money now, change your
change
withholding,
your
and
State
New York
withholding
State $10
so that they don't take so much, right?
Right. Yeah. Owe them that don't let New York owe you.
Yeah.
And the thing is, especially when you take a look at children being worth $3,600, children under the age of 6 being worth $3,600, children between the ages of 6 and 18 are $3,000, and so there's all and if you're higher income, $2,000. So you have all these credits. You don't want these big refunds. Chris is absolutely right. They're keeping your money. Change your W-4, and EG Tax will help you. Just call us. We'll help you with your budget. You can call us over the phone and say, this is what I got. These are my debts. What do you think? And it's just somebody to run something by. It's good to get a second opinion.
Right.
A second set of ears is always a good thing. It's just really, really wise, really wise,
Absolutely.
and
And
it
then,
never
like we
doesn't
talked about
cost
before-
anything to call us and be that second set of ears.
Right, and the other thing, of course, the big terrible bankruptcy thing. And actually, you can put tax debt into bankruptcy, can't you, Tiff?
You can,
And you can do an offer and compromise. That's another thing.
It has
that
to
we
be
can do.
old debt, and then you got to make sure that you can handle the payment because it still has to be paid within so many years when you do
Right.
bankruptcy.
But you help people all the time that have large tax debt.
Yep, I do.
So that's another thing. If you're unable to pay, EG Tax can help you with that. And of course, employers who never took advantage of the employee retention credit. I just had a client the other day. I called him up and I said, I really think that you're going to qualify for this. And he texted me back the other day and he said, I saved him $85,000.
That's all.
Wow, good way to end the show.
Yes. All right. I'm Esther Gullius, the tax lady. Have a great week. We'll see you next week.